All right, William, I'm excited to dive in. We had a fun little pre-show conversation. Why don't you just kick us off? Get right into it. We were talking a little bit about the show that you launched before the show that you launched a new product today. You're working on Wax. You're the co-founder of Tether. Is your attention now 100% on Wax? All right, and I'm curious what more about this launch that you had today.
Yeah, well, the launch is Major League Baseball uh, trading cards as NFTs. We did that with Topps, the famous baseball card trading company. Been around, I don't know, 80 years. So that is a big deal. We had done a few other collaborations with Topps before. We did their Garbage Pail Kids brand, which anyone from the 80s remembers Garbage Pail Kids. We did a movie premiere, Godzilla versus King Kong, and now we're doing what I always wanted, which was baseball cards, right? So Major League Baseball cards should be tradable as NFTs, and they will next week. So we announced it today, and next week the sale begins.
I
And
feel
then
like
to your
that's the most
question,
obvious NFT,
it actually
you
was.
know,
They were the
on some
first
level.
company. Yeah, they were the first company I went to a couple of years ago and said, "Hey, I built this thing called Wax. It's an NFT purpose-built blockchain." And they're like, "What are NFTs?" Like everybody else until like 2 months ago. And it took them a while, but they eventually said, "Well, maybe we should try this." And of course, I had to explain the difference between a digital item and a tokenized item, and that took a while. But now, we're many collaborations in with them.
What's the
So,
one liner on how you explain the difference?
oh, between tokenization and digitization, I would say one liner is a digital item can be easily copied and is unverifiable as authentic. And a tokenized item can never be copied and is instantly verifiable as genuine.
Mm. And did you come across this? Did you have this insight that NFTs, probably when you first thought of it, may not have been called NFTs, but this concept would be? I'm curious the origin story on how you kind of realized, maybe coming from Tether or maybe somewhere else, that you realized this is going to be very significant.
Well, the story goes back 20 years because 20 years ago, I was working on video game virtual items and marketplaces for trading virtual items that had some unique properties. They weren't all unique, but that could be traded anywhere with anyone for money. In fact, my partner was the first one to create a marketplace that allowed people to trade video game virtual items for money. And that was in 1998. So we're going way, way back. And people I guess up until even now, still struggle with it. They're like, it's just a digital item. It's not backed by anything. Why would that be worth anything? And you know who usually says that to me? Crypto people, of all things.
Hmm.
Crypto people will say, video game virtual items, but those aren't backed by anything. It's like, really, dude? You're a crypto person and that's what you think?
Yeah.
So, and then that company got sold. And then in 2015, uh, uh, my partner and I had been doing a lot of things post selling this marketplace, a lot of things in crypto. So in 20, he got involved in blockchain and Bitcoin a year and a half before me because I did not um, I wasn't sold, and I wasn't sold because of uh, being a venture capitalist in the '90s and having played around with magic internet money. There was actually little coins that you could use to pay for things back in the day, and they had names like beans and flues, and they didn't work. And in hindsight, the reason they didn't work was because they weren't on a blockchain. And since they weren't on a blockchain, there wasn't a ledger to tell anybody how many had been made. And if you're printing cash,
Right.
unless you're the US government, people kind of want to know how many are there. And so I was like, it's not going to work.
Right.
And he's like, no, there's this thing called blockchain. And it took a year and a half. And after a year and a half, I said, fine, man, just give me a pitch. So he pitched me for about 2 hours. And as he pitched me about uh, uh, blockchain itself, uh, I'm like, oh my gosh. I mean, I knew about blockchains. They might have been called something different, but back in the 80s, we took as auditors for banks. That's what I was, a bank auditor. We would take totals of things from daily deposits, wire transfers, whatever they are. We would make hash totals of them using an algorithm, and then we would file that hash away, and that way we wouldn't have to refoot all of the transaction history for the previous year, the previous month. We would know it hadn't been changed because the hash could be de-encrypted using an algorithm. So, of course, what the genius was of Satoshi was he paired a token to a blockchain. And once my partner told me that, I was like, you know what? We just have to make a lot of companies, and we did. We funded many, many companies, and we incubated many companies. And Tether was one of the ones we incubated. We also funded and were very involved in something called Mastercoin. Mastercoin was the first ICO, but it was also the first attempt to put an intelligent layer on a blockchain. And we only made one mistake with Mastercoin, and that was we built it on top of Bitcoin. And the Bitcoin core devs are not terribly imaginative, and they did not think anyone would ever want an intelligent layer on a blockchain. Like, why would you need that? And so after like a year of sort of like trying to get them to help us and support it, we launched one thing on Mastercoin, which was Tether, which worked very well. But then that team said, screw it, let's start a new blockchain and create an intelligent layer natively in the blockchain. That's called Ethereum. They called it Ethereum. And so my partner and I became the second largest investors in the Ethereum crowd sale, because the team that was at Mastercoin said, we're going to do it over, this time on our own chain. And uh, we thought at the time, because the idea of putting a smart contract on a blockchain was pretty revolutionary. We thought, oh, maybe we'll be able to use that as a digital escrow system, like what we do with video game virtual items. And in 2015, we had actually acquired a new site that was doing what are called skins. These are video game virtual items that have no in-game utility. They're strictly cosmetic. And because they were just cosmetic, we thought to ourselves, this is going to be way bigger than traditional video game virtual items, because people will just want a lot more of them. And we also thought, you know what? It would be really fantastic to put these on a blockchain so that people could own them outright, not be trapped in like the Apple App Store or the Google Play Store. Uh, but but Ethereum wasn't ready for prime time. So after about 2 years after we acquired this company, which was called Opskins, we found out that Dan Larimer was creating a brand new consensus mechanism called Delegated Proof of Stake. And when we looked at what Delegated Proof of Stake could do from a fee standpoint, very low, and from a speed very high, we said, all right, now it's time to put skins or images, virtual items on blockchains. And you're right, the term NFT hadn't been coined yet. And so we decided to do it by doing an ICO and creating a platform that was like our video game virtual item marketplace. And we called it WAX, Worldwide Asset Exchange. And frankly, we did a ton of work, building out not just a blockchain, but a wallet that I think is the best wallet in the world for blockchain. Social sign-ons, permissions based, so you don't need to retain yourself, your public and private keys. We can do that for you. An NFT standard that's second to none, the Wax Atomic standard. which most people in the NFT space probably even don't think about it. But the standard is where innovation is going to drive, because without a great standard for the NFT, you can't do everything because the standard limits you. So we knew we had to have our own standard, and it's kind of amusing to me because up until about 2 months ago, like in early 2021, no one cared about NFTs. Yeah, no one cared.
So
I
true.
mean, I say that like, but it was a very, very small number of us who were like, these are really cool. And I would go around for years, 2017, 18, 19, and 20, and was explaining that it's a new entertainment format. NFTs are going to be bigger than video game industry and the movie industry and the music industry combined. Every consumer product on earth that can't be eaten will become an NFT. That's what we were saying.
Huh.
And we built in 2017. We literally invented something we called virals, which stands for V as in Victor, right? VIRL. IRL in text language is in real life.
Yeah,
So
yeah.
we V virtual plus in real life. So viral, VIRL, is an NFT that is linked to a consumer product. We created that. I patented that, and we launched it. And it's been amazing. People love it. The very first viral we tokenized was a sneaker, a physical sneaker. It traded 220 times in the first 24 hours. And that's when I knew, try doing that on eBay, right? That's when I knew this whole NFT world was going to be huge. And yet, here's the funny thing, like, we're doing all this in plain sight, and like, no one really noticed. And last year, while NFTs started to percolate, we created something called the Wax Pack, which we launched around this time last year, which is we took Garbage Pail Kids trading cards, digital versions. We put them in a little pack of five, and for $5, you could get 5 NFTs. Now try to do that on Ethereum. Try to open up a $5 anything and have 5 NFTs minted. Well, you would probably pay $500 in gas fees for a $5 card.
Mm.
So we knew that you could only do this on a chain like ours, where it's the wallet is super easy for the average consumer. Of course, you can use credit cards. As crypto people love the idea of paying with crypto, but the reality is, if you want to get no coiners to use something, they're intimidated by crypto initially, and so the entryway for them to get comfortable with crypto, I think, is our NFTs. And by the way, you can probably Google my presentations during the Wax ICO in 2017, where I was describing to people how these virtual items could be traded and people would love them. And I will tell you, virtually everybody in crypto thought it was a terrible idea.
Why?
And that they back in 2017, they said, who would care? Who would care about virtual items? Who would care about images on in a blockchain? Frankly, it's not that much different from my experience with Tether. Now,
Yeah.
everybody today says, oh, stablecoin's obvious. Well, when we invented the stablecoin with Tether, it took a full year for crypto people to understand it. Crypto people. Crypto people told me it was a terrible idea. It made no sense to have a token linked to something off chain.
And
And
why
I
would they
said,
say that? Because you're right. Now it seems so obvious that you'd want to
like
at
everything.
least, yeah, yeah. But I mean,
Well, you know
even in
what they
hindsight,
said? You know what they said? And we're not talking, like I said, people who didn't know what a blockchain are. We're talking uh, the OGs of blockchain and crypto, all the people I was associating with. Here's what they would typically say. But William, uh, so you're creating the term stablecoin hadn't been invented, but You're creating a derivative of a US dollar, right? So you're digitizing the dollar. And I'd say, well, sort of, yeah. And they're like, but dollars were digitized 50 years ago. So what's
Right.
special about a stable coin? It's a digital dollar. And even today, when I say this to crypto people who love stable coins, they go, oh yeah. And then I have to say to them what I said back then, which was, oh, you don't know the difference between digitization and tokenization. You just don't know
Right.
the difference. And if you
Right.
don't know the
Right.
difference between digitization and tokenization, then a stablecoin makes no sense because dollars have been digitized forever. And
Right.
then they would
Or at
say
least,
stupid
yeah.
things like,
Yeah.
and can't you move a dollar, anywhere digitally? And I'm like, no, and it takes days.
Yeah. Yeah. No, it just seems like when you lay out the benefits of maybe people got caught in the labeling of digitization versus tokenization, but when you explain that you can send it to anyone anywhere in the world any time of day, just that in and of itself, and then you describe, okay, I want to wire William $1,000 to my bank. How can that? Well, it's a holiday. Sorry guys, it's a bank holiday. Sorry guys, it's the weekend. It's after 5 o'clock, and it's going to take 2 to 3 days. So just that simple example,
Right. And
just
here's what they would say: my credit card works instantly. And I would say to them, if you can use a credit card, then you don't need a stable coin. But guess what, Mr. US centric person? The vast, vast majority of the world can never get a dollar. The vast majority of the world doesn't have access to banking. They don't
yeah,
even trust banks. How do those people transfer electronic money to each other? How do they do it without their money being seized by a corrupt bank? And
yeah,
and and by the way, the big thing that Americans never think about is when you take a dollar and you pay a vendor in Germany or any other kind of cross-border transaction, that dollar gets converted to the local currency. They don't think about what the currency conversion costs are. Collectively, every year, there is $1 trillion of currency conversion costs that are borne by consumers and businesses. $1 trillion.
hmm,
So when you and see,
yeah,
we had been in the video game marketplace, virtual item marketplace business, where we had 100 different payment providers in different currencies. Some currency conversions from into dollars was a 40% fee. So
that's
think
crazy.
about that. That was
Yeah,
why I was like, stable coins are going to be amazing. But like a lot of great ideas, it just takes people a while to think through it.
let me ask you. So I just to get into Tether and then moving on, but a couple guys came to you, pitched you the idea for investment, and then you worked with them closely to get it off the ground and get adoption. I presume was
What is
the
that?
scenario.
What are you referring
Oh,
to?
Tether.
Oh no, I invented Tether with two other guys, Brock Pierce and Jonathan Yantis.
And
So we came up with the concept and then we built it. Yeah.
mhm.
So in that case, we it wasn't an investment. That was our invention.
And how what contribution did you make to the building process? Are you coding? Are you more on the
God,
product
no,
side?
all
Yeah,
strategy,
strategy.
rollout. How one banking, right? So
Hmm.
that became the impossible thing. How do
Yeah,
you go to a bank? And people who've been in crypto only the last 3 years don't understand it. They don't appreciate it. Crypto was like next to being an international terrorist, right? We were next in line for being
yeah,
unliked by banks.
yeah,
No one liked opening bank accounts for crypto people. When I used to hire CFOs for our incubated projects, I would say, so the number one thing you can do that will be a miracle is to get us a bank account. And they would laugh and they'd say, what are you talking about? That's easy. And I said, wait till you find out. No.
yeah,
Virtually impossible. So I helped that. Ultimately, we actually partnered with a different group because we couldn't get it done. We partnered with a group of guys who had started an exchange called Bitfinex, and they had a bank, and so that became the solution. Was they had a bank and we could use their bank, and then getting exchanges, right? So I was talking to exchanges and explaining it to them. Now the alt exchanges, and that's a term probably that a lot of your, if you got into crypto since 2017, you probably haven't heard the term. But an alt exchange was what we called an exchange that had no fiat
Right.
deposit
On ramp.
capability or withdrawal. That was virtually every exchange on earth.
Mm.
And so the original impetus for Tether was we were trading crypto on alt exchanges. And then every once in a while, once a day or so, we would get scared, or we would want a safe harbor. We'd want to get into something stable. And so our instincts were to try to convert from that weird token, whatever it was, into Bitcoin usually, and then take the Bitcoin and sell the Bitcoin for dollars on one of the few exchanges in the world that allowed dollar trading. And then they didn't hold the dollars. They would generally require you to get it wired to you. That would take 3 days. And so now you've got this thing, but by that time you want to be back in. So then you reverse. So it's like a 7-day process. And so which is why ultimately we just dealt with volatility. But there were times we kind of knew volatility is coming and we'd like a safe harbor. And so that was the original thought process. What if we had a token that didn't move in price? Well, how would we do that? And we thought, well, maybe we could peg it to something. So we thought of all the stuff to
Right.
peg it to, silver, gold, stocks. And then we were like, well, what about just something simple like a dollar? Now, the truth is dollars do move, right? All currencies move in relation to each other. But so we didn't eliminate volatility, but what we did do is we greatly reduced it. And it was the traders, the alt exchange traders like us, who loved Tether. But initially, it's crazy. Now the annual volume on Tether is trillions of dollars, right?
Yeah,
But
it's crazy.
back then, I remember trying to convert my Tether into Litecoin, and it took it was just like $150,000 of Tether. I think it took like 3 days. The
Wow.
volume was
Wow.
that low for that trading pair, Tether to Litecoin. It took
Wow.
literally 3 days. So
And how much has the project changed? I mean, I assume they're not on the same banking system now, but
no, and there's
from a
been a
little bit
lot of
of digging,
right.
yeah,
There's
right.
been
You're
a lot of
critical on
controversy.
how they set it up.
Yeah, I don't. I think critical is too harsh. I think I talked to a couple of journalists who like love to be controversial. I mean, literally, what I said was, you know what? If I were running Tether right now, I would do it in a way that I had a ongoing audit, a monthly audit. It would be very
Yeah,
easy. I mean, I used to be an auditor, okay, a bank auditor. It's not hard. In fact, you know what the easiest thing to audit on earth is? A bank account. That is the
yeah.
easiest thing to audit. And so you could literally audit it nightly if you wanted to. So I don't know. And I said to some journalists I was talking to, I said, I don't know why the team running it is sort of opposed to it, but they are. But what I do know is I love Tether. I love stablecoins. While there's many other stablecoins out there, Tether is still the granddaddy. Remarkably, it's changed very little. You do have now what are known as algorithmic stablecoins. These are coins that are backed by nothing except an algorithm that controls supply and demand. But which I think is great. I think it's a cool,
Mm, yeah,
innovation. Uh, Not as probably reliable as literally something linked to dollars,
yeah,
but
yeah.
but still, the fact that it's completely on chain is cool.
Do you think there's a chance that, I mean, I can't imagine why these guys would not want the audits. Is there, obviously the question is there a chance they don't have the money in the bank? And
No
I,
way, they have it.
yeah,
Yeah,
they have
no, they
to.
have
Yeah.
it.
Yeah, it's like,
Yeah,
why not? Yeah, I agree with you.
and it's not a question
Interesting.
I can answer, which is what I told the journalist. I said, look,
Yeah.
were it me, were it me, I would do a lot of things in this world differently. You know,
Yeah.
I would put nothing in an app store. I wouldn't have closed systems. Most stuff would be on blockchain, but it's not up to me. You know?
Yeah, it's not up to you. Yeah. Uh, well, let's shift back to the. Yeah, that's it's so funny because stable coins have now just become such a mainstream part of crypto trading and just crypto land in general
And everybody
that
thinks of them as just like obvious, like I said. And my partners and I have invented a lot of cool things over the years. And I can tell you, uh, it's almost always the case that if it's going to be a very successful thing, the first thing people say when, they finally get the concept is like, oh, that's obvious. And it's like, well, you know, it seems obvious, but before you saw it, did you ever think you were missing it? You know,
yeah,
like when I
yeah,
first said to people, when it came to tokenization, everybody up until even a few months ago was like, tokenizing dollars. We did that. Tokenize gold, tokenize stocks, tokenize real estate, tokenize commodities. Uh, while we were doing Tether, we were like, you know what we want to tokenize next? Sneakers, apparel, records, consumer products. That's what I thought because we traded consumer products, right? And so I'm like, wow, tokenizing them would be fabulous. Creating digital twins of products so you could trade the digital twin. Only when you want to consume or use the product would you redeem it. That seemed like fabulous idea to me, and you know, no one really
pushback.
thought of it. You know,
Yeah,
people were
it,
just
that
like, oh,
yeah, I think the idea of and putting a NFT on an item in the real world it throws people for a loop a little bit because you're on one level you're saying on the level of the video games and the skins you could say you own it and you have proof of it and it's a digital item. It can't ever leave computer land. It doesn't exist in the real world, and so I can show that I own it, and there's a connection there because it's all in the same place. When it comes into the real world, I can take your sneaker, I can rob your house. Now I own your sneaker, and I don't care what NFT you have that says anything. So they're quite independent properties, right? They're
yes,
not.
but in the same, but think about this. And yet, so much of what we do every single day has that characteristic. I'll give you a
Yeah,
simple example. When you trade a stock, are you mailing the stock certificate? By the way, you can get the stock certificate. You can. You can get Facebook or whatever to mail you the stock certificate. So why don't you want to hold it as a stock certificate? The reason is because when you want to trade it, you now have to send it back to Facebook.
mm-hmm.
Their legal counsel is going to look at it. They're going to make sure it's genuine. They're going to require notarization, da da da. It's going to take 6 weeks. You don't want to spend 6 weeks trading. So, what we do is we have a digital representation of the physical stock certificate, and no one has a problem with that.
Mm-hmm.
And what it comes down to is the use case. And so every time me and my partners do anything, we think of use case. And I think if you don't think of use case, then you might say, why would I want to tokenize something? Right? Well, when you separate ownership from possession and you start to think about what can I do by owning something, but not physically having it, on my person or, holding it in my hand. Well, there's a ton you can do because it turns out many, many things people buy and people sell or people gift, they are not the intended end user.
And they
So in
never have
that case,
possession. Like
yeah,
your example with the shoes, right? If you trade shoes 250 times a day, the shoes are probably locked away in some warehouse, and that's okay. The person who owns, there seems to be,
that's right.
I mean, you've given this a lot more thought, but the person who owns the key, the right to the piece of property, call it a shoe, has to be that key and that chain have to be recognized by the place that stores the physical item, right? There has to be
Yeah, and that's
some,
what we do. So we
right.
have a warehouse, and in that warehouse are the items, right? And so what it comes down to is what I would call asymmetrical trust. So asymmetrical trust just means in a two-party transaction, um, one party is trusted by the other, but
Mhm.
not vice versa. So a perfect example is Amazon. So Amazon maybe doesn't sell to, I'll pick up a country, the Ukraine, right? Maybe it doesn't. I don't know, but let's assume it didn't right now. And it might say, well, there's a lot of credit card fraud out of the Ukraine. I can tell you that's true from personal experience. So if somebody wants to give us their credit card from the Ukraine and buy something, and then we ship it to them, we're not so sure that that credit card isn't stolen. Now, the person in the Ukraine who's a legitimate person, I bet you really trusts Amazon because they know Amazon's not going to take their $10 or their
Right.
$20. So in that case, they trust Amazon. Amazon does not trust them. In that situation, it's very easy for them to take a digital representation that Amazon gave them of a product and say, I know I can redeem this anytime at Amazon because I trust them. And this is true. If you take it a step further, you would say this is true of all big brands. We, the consumers, trust the brand. The brand may not trust us. You know, if
Mhm.
Coca-Cola ships to a store or ships to us a bunch of sodas, we feel pretty good that those sodas are safe and, you know, tamper free.
Mhm.
If we were to be holding a bunch of Coca-Cola and we said we're going to ship it to you, Coke, and go resell it, they'd say not so fast, right?
Yeah.
And so asymmetrical trust, that situation that exists in almost everything in capitalism. And how do you get to be the party people trust? You spend a shit ton on marketing, or you are around for a long, long time. That's how you do it. So it's very expensive. Now, blockchain, when it comes to fully on-chain items, the beauty, like a let's say an algorithmic stablecoin or even a wax token or Bitcoin. What's so amazing about that is no trust is required because you know by the fact it is a tokenized um, object. You know when you send me or I send you a Bitcoin, you know it's genuine and you know it instantly and you know it at no cost. Those
Mhm.
things are like things economists dream about. To
Right.
be able to validate that something is genuine almost instantly at zero or very low cost, it's outside of blockchain. It's hard to think of an example of where that exists.
And the
People,
fact that you can transfer that verifiable
that's
ownership
the thing.
stamp. Yeah. Yeah.
I can
Yeah.
transfer it to you. You don't know who I am. You don't know if I'm a crook or whatever. I can transfer it to you, and yet you will for certain say yes, that's a legit payment. That's a $60,000 today's price Bitcoin,
Yeah.
and I know it. Let me give you $60,000 worth of gold. What would you do with that? Your first instinct is going to be, I don't know if it's genuine. And then, you know, people will always say like, well, I can get it tested. Really? So you go to your
Yeah.
local assay office every day. And by the way, how do you know the assay office isn't in on the scam?
Yeah.
So
Yeah. Yeah.
it's going to take how long to actually do that? A week? And
Well,
and and so
how do you think about the difference between the commodity? Because you would never NFT one block of gold, right? Because that gold in and of itself is not any more or less valuable than any other block, which is the theory on why like a sneaker would be uniquely valuable in some sense if it's tradable or it's a limited number of sneakers. But if there is theoretically unlimited number of these type of sneakers, it's like prints of an art. You know, the prints aren't as valuable as the art, right?
yeah, yeah. Now you're going to get an ability to fractionalize. I mean, we already do that in a way at Wax with crafting, where you will take multiple NFTs and you will combine them into a new NFT, right? So that's one cool feature that we did that with the Street Fighter video game NFT that sold out very fast, and people loved the crafting aspect of it because you didn't know when you combine these distinct NFTs, what the new NFT was going to be. what its rarity was going to be. And that kind of surprise element is a huge draw for consumers. That's the reason I did the wax packs. We were the first people to put a pack in an NFT or a bunch of NFTs in a pack. We did that with Tops, and people love opening up that pack. And we had nice animation and all that, but the reality was you were getting 5 NFTs of initially the Garbage Pail Kids series, and you didn't know what rarity, you didn't know
Yeah.
what they were going to be, and a lot of us like that, you know.
What's the edge case where you're skeptical, where you think this is it's circular, it doesn't make sense? Like what use cases do you think people are tripped up on or go too far with regarding
Right.
NFTs?
Thanks for asking that. I don't know who the people are who are buying 25 or like 50 NFT drops on Ethereum for some slice of music or an unknown artist and paying tens of thousands, hundreds of thousands, millions of dollars for that. To me, that's insane. I'm skeptical of it because you need some uh, some like providence of the even the artist. Like, who is this person, and how long have they been doing this? And what we learned from 20 years of trading video game virtual items and skins was that the secondary markets for virtual items, and in fact, I would go further and say secondary markets of all things, digital and physical, all rest on one solid foundation, one thing, and that's confidence. Without confidence, the buyers won't be there. The liquidity certainly won't be there. No one will be attracted to a thing. And you can destroy confidence in a market by, for instance, flooding it with cheap imitations or not having a philosophy about what you're doing. So when collectors like to know that there's going to be a long timeline of some creative process where maybe a series of things will be done. Topps trading cards, you're talking 80 years of history of baseball cards. Some of these worth millions of dollars because people have faith that this company is a good steward of that brand.
Right.
So I can see buying things, from a noted brand, and I can even see maybe buying things and taking, a risk on price, but a few $1,000s maybe. But when things get to be from brand new people with no track record, hundreds of $1,000s to millions, I just think the prices got ahead of themselves.
Yeah, which almost seems like an inevitable part of a new technology introduced into a market, right? It's like,
True.
how many times do human beings need to learn this lesson where it's like we spike with
Yeah.
excitement, we all get really excited, and then we're like, oh, it's not that cool yet, and then it's going to, slowly get more interesting as time goes
You
on.
just mentioned Bitcoin. There you
Yeah.
go.
Oh, yeah. And the internet, right?
You're right.
Probably gold.
Yeah, gold. It's
Yeah.
just a lesson we all have to go through. But I've
Humans
told this
love
to a lot
exciting
of people.
shit. That's the bottom line. We love stuff that gets us excited about a better future. Progress is in our DNA. So
Yeah.
yeah. Do you think that I was trying to think about your question on philosophy. It seems like you can have. I interviewed Rohan, the CEO of Dapper Labs, when they launched the NBA Top Shot. And he made this point I really liked, which was that things like Pogs and baseball cards, basketball cards, they have this kind of antique value to them, where people have been collecting them to just fade them from physical life into digital life makes sense. And then there's the things that, in second category, are the things that I could actually benefit from them in person. So if I bought the NFT for a piece of art, I know I could one day, put that art in my living room and enjoy it. Then it kind of gets into chaos when, like what you're talking about, there's slices of songs that it's difficult for people to ever see how it's relevant.
Yeah.
I'm wondering how does that philosophy make sense, or that categorization of what is interesting to NFT? I see people talk about NFTing a tweet or it's hard to draw a line around what becomes salient or what becomes actually interesting to NFT. And you said earlier, NFT, everything that's in the physical world.
Yeah, no,
That makes
that is absolutely even from a strict business standpoint, is as powerful as tokenizing the dollar. When I was out there proselytizing why it's rare, and I was a venture capitalist for many, many years. I did a lot of new technology things, and launched the very first consumer internet venture capital fund in the 90s. When people said consumer internet, like, even internet is probably not worthy of its own fund,
sense.
but consumer internet. And I'm like, well, I came from Disney, and I think consumer is going to benefit a lot from internet. Well, when you get to uh, uh, tokenizing, like things like physical products, um, the benefits, just like tokenizing the dollar, they're so overwhelming. You actually can't find a downside, which is what I would always say about tokenizing a dollar. When you can do something and there are only benefits and not a single drawback, that's when you know this is a winner. When we started thinking about first tokenizing, virtual items, then dollars, then products, we realized you just take one thing which is not small, like the environment. The fact that so many people buy things, but they're not the intended end user, and then they get shipped to them, and then they wrap it up and they speculate by selling it on StockX or eBay, or they gift it, but the gift isn't really what the guy wanted, so they return it. And when you think, what if we could put a pause button on the consumption step and say, I'd like to own it, I might even want to sell it, and never take physical possession of it? How does that help the environment? How does that help the speed in which transactions can happen? And how does that benefit maybe manufacturers who today don't have a direct to consumer relationship, but now they can through NFTs? And we're giving them that. In fact, there's a toy company called Funko, $1 billion toy company that makes toy figurines, licensed products like Star Trek and Star Wars and Marvel figurines. If you've ever been into like a Target or a
Mm-hmm.
Walmart or whatever, you'll see these little figurines. When people collect them, they like them. And we told those guys about virals, NFTs linked to physical products, and they got it like almost instantly. They were like, "This is remarkable. What this is going to do for our business." By the way, their stock went from, I don't know, about 100% after they
Wow.
announced that they were going to do this. So it shows you. By the way, Topps, the trading card company, was a private company for 15 years. They go and work with Wax and create NFTs. Well, a SPAC is taking them out at $1.2 billion or some valuation. So I look at what we're doing with NFTs and now with virals, and I think it's going to change. It's going to change the way consumer products are delivered, and
Mm.
that's big.
Mm.
It's I could go on and on and on about the benefits. There are very many, and
Yeah.
uh, yeah, and
Yeah. So in that case, would the people who own those Walmart trading, what were they trading? Uh, Pog. What were they
fig-
trading? Pog figurines.
figurines.
Would
So
they
so
would they put those in a warehouse or your warehouse, for instance, to store them, and that would be how
yeah,
they're concerned about? Yeah.
Funko. You
Yeah.
can buy from Funko the figurine. You can buy it as the physical, have it shipped to you, or you can buy like a coat check. You can buy the viral, and the viral gives you the right to it, the ownership of it, but not the possession of it unless you want to, which you hit redeem, and then you redeem it.
Mm. So you guys have a warehouse somewhere with a ton of products in there?
Funko does, and then
Funko, yeah.
We Wax do for other products as well. And but now we're going around to some of the top brands in the world, and we're describing what we can do with NFTs. There's
Huh.
so many of these companies have been bum rushed by all
Yeah.
these people who in the last 2 months learned about NFTs, and they're like, we're going to sell NFTs. And I'd say when we talk to brands, uh, they're always blown away. They're like, nobody talks about NFTs the way you guys talk about NFTs. The what they can be, how they're computers,
Yeah.
they're entertainment formats, and that's how
Yeah.
we think about them.
God, I could almost see a scenario where, like a producer or a manufacturer of some item is holding a NFT raffle prior to even manufacturing it. It's just a concept right now, and they're allowing a bidding process for the NFT. And if it hits some milestone, then they make it. It's almost as a way to guarantee production or guarantee demand for a product before even making them,
Yeah,
which is
and of
pretty
course,
game
I can tell
changer.
you, we've thought of that and we've done that. So yeah,
Yeah, that's
yeah,
pretty
yeah.
cool.
I would, I hate to say it, but when we go to brands, I will generally go and say, guys, uh, any anything you can think about an NFT doing, we've thought of. And I have
Yeah.
thousands and thousands and thousands of patented claims around this. I've thought about it for years. Uh, uh, that's just like what we've spent
Yeah.
our time doing. And so far, by the way, uh, hopefully somebody does come up and say, "Have you thought of this?" And we say no. But so far, um, if somebody's just spent a couple of weeks or a month or so thinking about this, it would be really hard for me to imagine
Yeah.
they've come up with
Yeah.
something we haven't. Now, what we have to do is get the consumer mass market to understand it and want it. Uh, NFTs, I'd always said, like I said back in 2017, I said the on ramp to mass market adoption of blockchain based tokens is going to be virtual items, what are now what we call NFTs. And I feel like the second thing that has going to bring massive adoption is something else that I co-invented, which was the stablecoin. So in a few years, I would say before the end of this decade for sure, um, uh, every one of the 20 largest global economies on earth will have tokenized their currency. And it will be so obvious to everybody that that is the only way to transfer currency people will wonder why they didn't do it before. And
I agree with you
it's
there.
taken, Tether we came up with in 2013. Think about it. Like, uh, there's still no major economy, minor economy on earth that's tokenized their currency. Now, China will be the first, right? They'll come out with a digital RMB, a tokenized RMB this year.
Mm.
Um,
Mm.
and again, unless you're in the payment space like I am, and you think about cross-border commerce like I do,
Mm.
it wouldn't be as obvious to you why it's so amazing. But think about it. There's no way for the vast majority of people on planet Earth to hold yen in a bank,
Yeah.
euros in a bank, Chinese yuan in a bank, Indian rupees. You might want to pay in those currencies, but you can't. You know why you can't? Because you would need a bank account in that
Yeah.
country.
Yeah. Yeah.
Try to be
Yeah.
a US passport holder. Just try
Yeah.
and try to get a bank account opened in Japan, in China,
Yeah.
in India, in Korea, heck, even in Europe. They don't want you.
Yeah. Yeah. You think it'll be difficult when China tokenizes their currency? Will it be difficult for people outside of China or US
Oh,
citizens
that
to get the currency?
that is the $64,000 question. I mean,
Yeah.
obviously, we know it's not going to be on an open blockchain, right? That's
Right.
pretty
Right.
obvious to everybody. So it's going to be on their own blockchain. My guess is everybody in China is going to have a blockchain account. That will be their lifelong uh,
Yeah.
like
Yeah.
identity point. And let's face it, you and I know that unlike what all the people in the news still say about, oh, crypto can be used by bad guys because it's anonymous. There ain't nothing anonymous about crypto, man. You use chain analysis and they're going to find who you are. And there's a record of every single transaction that token took from its birthday on. That, like, no, if you want to be anonymous, don't go into crypto. So I think all of the major economies are going to love that. And what else is a problem for
Yeah.
countries like the United
Taxes.
States? Well, taxes, yeah. So you can easily monitor that, but also counterfeiting. The
Mm.
US $20 bill and $100 bill are massively counterfeited. Guess what? No more counterfeiting. Done.
Yeah.
Right?
That's
Think
true.
about that. All the
Yeah.
effort the US goes through to create these super, super hard to copy currencies, and the North Koreans do it anyway. No, counterfeiting done.
And do you think these countries will have it such that they have the ability to create more volume in the market at will? That seems like the Federal Reserve and the link to the banking system today's biggest grip on the economy is interest rates and printing money. Will
Well,
that be a
remember that, yeah,
necessary part?
yeah, there is. So remember, stable coins or a central bank digital coin, as they call them. These are not this. What you're not doing is creating new money. You're creating a new wrapper to go around that money. So the U.S. government's not going to get rid of the dollar,
Right.
and now it's
Right.
going to be like it's going to have a rupee. It's it's
Right.
it's just saying, okay, all dollars now are wrapped in this thing called a token, and we now know exactly where they are, who's holding them. Now, who knows what the U.S. government and all the other governments will do about holding their central bank digital currency? They may say,
Mm.
I hope they don't, and it would be annoying. They may say you may not own it and hold it in your Ledger wallet individually. You must hold it through a bank, which you and I would then say that takes away a huge part of the value of it.
Yeah.
The fact that I
Huge.
can bypass the stupid fees and all the junk that you have to deal with banks. Who wants that? We want to just be able to send stuff, currencies to anybody and not have it be converted. That's what's so
Yeah.
amazing. Like the fact
Yeah.
that I can send a euro or a dollar, rather, I can send a dollar to a German retailer, and that German retailer can just keep that tokenized money. Even if they
Yeah.
don't have a dollar denominated account, they can keep that tokenized dollar, and then they can spend it when they want to buy something that's denominated in dollars and have no currency conversion.
Yeah.
Huge
Yeah.
for your margins.
Yeah. No, it's enormously beneficial. And I think I've heard someone say that, I don't know whether I agree with this or not, but one of, or if not the biggest export of America is the currency, is the dollar. It's one of our biggest exports. And if you think about the number of people across the world who use the dollar, like Argentina, for example, people love using the dollar. They would much rather hold the dollar, get paid in the dollar, spend the dollar than use the Argentinian peso because the inflation rates there are crazy. And so if they had, I mean, Tether is going to be, widely adopted because you can use it without having a bank account. But
Yep.
not having a bank account is critical. It's like having a bank account in
Yes.
Argentina for US. It's difficult. You can use TransferWise, you can do it, but not everyone can do it. And
And
there's so many different country
restrictions.
restrictions. Yeah, totally. Um,
This
yeah,
is the first
no,
time
that's
with tokenized currency. It is the first time in history that you can have everybody in the world hold dollars, euros, rupees, yen, hold it individually, and yet transfer it as though they're connected to the world's greatest financial network. Because they can,
yeah,
as long as they've got an internet connection, they can send that to anybody. And
yeah,
uh, uh, for it's actually quite disruptive, because even though we say the US dollar is the reserve currency of the world, most people don't get that. That's central bank speak. The vast
hmm
majority of people in the world do not have access to dollars because they
hmm
would need a bank account or they need paper money. Well, paper money, if you go in certain parts of Africa, it's worn thin because it's
hmm
20 years old and it's being used as reliable, stable currency. Well, wouldn't it be better if on their phone they could just transfer
Oh
Tether?
yeah, that feels. I mean, Africa is going to be, I think, a leap. They already are. I mean, my startup Redeem, we see Africa as the biggest continent for trading crypto, and they're super early in Bitcoin. I mean, the CEO of Twitter went over there last year. Was it a year and a half ago?
Yeah.
So it seems like, yeah, Africa is really going to help them tremendously. I was going to ask you, do you see? So taking by analogy, USD is now the liquidation protocol. I mean, it's overly fancy. It's the currency that everyone uses across the world by and large. Um,
Yeah.
when we move to crypto, we have the blanket, the layer of the USD. We have Bitcoin. Do you see it to where it doesn't seem to me that Bitcoin would be the layer that everyone uses to transact
Are you
casually?
kidding?
It seems
No,
doesn't Bitcoin seem more analogous to gold in that sense? Like,
absolutely.
or do you?
No, you're right. I've been saying this since, frankly, Tether. It's like, I know Bitcoin was started as a money substitute. It is the worst payment platform
Yeah, it's
on earth.
so it's slow and very expensive. I mean, yeah,
Hard to use.
yeah,
No, yeah, no. If you're gonna, what it's gonna be stable coins, tokenized money. It's not going. And people say, "Oh, what about like Lightning Network? Have you used the Lightning Network? It's a joke."
yeah,
It's yeah. Bitcoin is a great store of value. It's fine if you want to do a large dollar amount transaction cross border. It's instant. It's
yes, yes,
uncharged backable, immutable. It's wonderful.
yeah.
But for common consumer transactions, no,
Transactions.
Bitcoin is never going to be used.
Do you think that, say, given the trajectory of American dollars, that we printed more money in the last year, I think, than ever or for a
I
long
think
time?
so. Yeah.
If America hits a downslope, we print too much money, we're not as productive as we thought we were, the dollar declines. Does that kind of leave a black hole or like a vacancy in what the world is using? Does
I think
Tether now? Yeah,
Well, so
that
Tether,
makes sense.
remember, is just a wrapper for a currency. So if the dollar declines in value, then relatively that tetherized dollars declined in value vis-a-vis another currency. So, but in regard to something like Ethereum or Bitcoin or any other token that people want to use to transact, of course, I think we can look at the enormous rally in Bitcoin and then Tether and then all the alts since the pandemic and the fiscal response to the pandemic globally. I think you saw this late last year where a lot of people on Wall Street were saying, maybe we need an inflation hedge and maybe crypto is the thing to do. And then it just blew up in Q1,
Hmm.
where in Q1 2021, where now, Bitcoin doubled in 1 quarter. So after having gone up 2x in Q4, and now the alts are all rallying to enormously high amounts. We're at
Mm-hmm.
trillion market cap from like a year and a half ago it was 200 some odd billion market cap. So I think a lot of that is because of a flight to something that has a fixed quantity, has been used for a while. People have faith that it cannot be debased. Yeah, so I think we've already seen it. On the other hand, the money supply is large. Most humans like money. They like fiat money, and that will probably maintain the
Mm-hmm.
status quo for another 10 years, maybe more.
Yeah,
Um,
yeah,
uh, we will have to see, but currency, all fiats have always declined in value, you know,
yeah, yeah,
because of
yeah.
the impulse that governments have to debase it.
Yeah, yeah. Um, do you have a couple more minutes? I want to ask you stuff, just changing
Just a
gears a little
couple.
bit. Sure.
Yeah.
So I want to ask you about you for a second. So you see the personality type that I'm picking up is you'd like to be on the tip of the edge of what's happening, and going from a bank auditor. I'm curious if there had been. I think of a bank auditor as someone who's the opposite end of the spectrum, who's very conservative. They probably slower moving, more meticulous, and now you're in the strategy of leading like bleeding edge technology. Do you feel? I'm curious how that transition went, and
Yeah, the short answer really
if that's how you
quickly
think of
is,
it.
I was studying finance, economics, accounting, and I wanted to be a capitalist. I wanted to be in business.
Yeah,
My mother was an entrepreneur, and it was obvious to me as a young guy that the finance world had a language. And the language was spreadsheets and accounting, generally accepted accounting principles, and income statements and balance sheets and statement of cash flows. So since I knew I was going to be in the financial world, I thought, well, I need to understand how banks work. So I worked at a public accounting firm called Arthur Andersen, and I joined initially the Japanese banking practice group because all these Japanese banks are coming to America. This is in the 80s. And then I was auditing a bunch of U.S. banks, and it taught me a ton about the banking system and about how banks worked in conjunction with the government to stimulate the economy. Fractional reserve banking, the idea of creating 10 times the amount of money as is deposited in order to grow the economy, the credit cycle. So I did all that over like 3.5 years. And then I was like, okay, I got a decent enough foundation. Now I want to do stuff that's fun in the consumer space. And I went to Disney, ultimately becoming involved in Disney consumer products, and then
yeah,
the finance function of a bunch of different groups, uh, Disney licensing,
yeah,
Disney store. And it was while I was at Disney and I was doing a lot of consumer stuff where the internet hit. And I was like, man,
yeah.
this
That's
is
it.
going to be transformative. And how do I play it? And, my finance hat I put on and I thought, you know what, I'm going to try to do this venture capital thing, which is a whole different story, trying to
Yeah, yeah,
break into
yeah.
venture capitalists into venture capital 25 years ago. It was a very closed group and, not the most straightforward thing. But ultimately I realized the only way it was going to happen is if I started my own fund. And that's what I did.
Yeah. 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 Venture capital is it's a long game. It's like, to be in it and do it well, you have to be thinking 8, 10 years out and
And
long-term
yeah, and one of the
returns.
things we did at my firm, we did, early investments in a bunch of e-commerce companies, but also we realized early on that payments, you couldn't really get a credit card early on. No one would allow you to use a credit card online. And we came across Max Levchin and Reid Hoffman and Peter Thiel, three guys who had started PayPal, and we were the first institutional investors in PayPal. And that
Mm,
company, for its day, even today, is remarkable. Once they created the PayPal site. It wasn't an app. Uh, uh, we were signing up 25,000 new customers a day. Now, even today, that would be impressive. But I'm telling you, not that many people were on the web back then. But
mm,
everybody could understand the idea of paying, using the internet to pay people being a
mm-hmm,
very
mm-hmm,
cool idea. And,
mm-hmm.
and then I got heavily involved in payments just by having
Yeah.
to do video game virtual item buying and selling.
Yeah. Yeah. Well, it's interesting how where people find their competitive edge. It's like you can go where there's uncharted territory and you can dig new, innovate, like dig on the Western frontier, which seems like a lot of what you're doing and have done. And then there's some people who want to get in entrenched industries and just compete with incumbents, and like it's a totally different
It's
mindset.
so different.
Yeah.
And you are right.
Yeah.
It's different personalities. To me, going into an old, very stable, unimaginative industry and trying to convince them to do something different. I did do that once. The music industry, the
Yeah.
guitar manufacturers. I backed a brilliant entrepreneur who had developed an analog system for self tuning, auto tuning guitars, and just to me it was incredible that you could on the fly be auto tuning because your guitar gets out of tune after like 2 minutes of playing.
Hmm.
And so to me this was analog, not batteries, whatever. It attached to the guitar. It was brilliant. And you know what? try to take a multi-hundred-year-old industry and try to
Yeah.
bring an innovation to them. And it was, I kind of kicked myself for it because it's one of the lessons I've taught entrepreneurs for decades, which is know the industry in which you're trying to innovate. Are they receptive to innovation? You know, do they have a history of adopting new innovations and new technologies or not? And if not, then maybe avoid it or disrupt it outside of the industry altogether.
Yeah. Yeah. I agree with you 100%. Yeah. William, this has been a lot of fun, and I really enjoyed it. I learned a ton, and I'm sure people will that listen in. If people wanted to reach you, are you best on Twitter or anywhere
I'm on
else?
Twitter, William E.
Yeah.
Quigley, uh,
Okay.
on Twitter. Also, wax.io.
Mm-hmm. Mm-hmm.
Those two places are good. Also on Twitter, you can find us at wax.io. And lots of news about NFTs and things that
Yeah.
we are building that people can
Yeah.
find.
Yeah. And do you write or you do a
I
lot of
love,
podcasts?
I love to write, but frankly, I have been unable to write for several years because other than Medium posts talking about what we're doing on Wax, it's I love it, uh, but it's a very time consuming thing, and it's a
Yeah.
luxury
Yeah.
for me right
Yeah.
now.
Yeah. Anything you're looking for? Investors, engineers, users, I'd imagine people to get on there and start
We
trading.
are hiring a lot of people who are in marketing, who are C++ developers, uh, even customer service people. If you go to wax.io, you can see a place there if people are interested.
Hmm.
We're really creative people, and over the next couple of months, you're going to see some really well-known, big branded companies launching NFTs on Wax, so they'll be able to track it.
It's awesome. All right, William. Well, as it was a complete pleasure. So I'll talk to you soon.
Thank you. It was great.